It's the mid-1900s, and a successful businessman named Frank McNamara was soon about to change the way we borrow money. Frank worked at the Hamilton Credit Corporation. The Hamilton Credit Corporation was founded in 1920, with its headquarters located in Chicago, Illinois. See, during these times, getting a loan as a small business was fairly difficult. But there's where Hamilton's Credit Corp light bulb turned on. The company provided loans to businesses that were too small to be served by the traditional bank. And its lending practices helped many businesses get off the ground. Frank McNamara worked as a sales executive at Hamilton Credit Corporation in the 1940s, where he gained valuable experience in the financial industry. And on one particular day in the 40s, Frank is out and about as usual, having business meeting with clients at their favorite restaurants. And per usual, everyone eats, the server comes with the check. Frank quickly realized that he had forgotten his wallet.
You know what? I left my wallet in the car. I'll catch you next time.
And he had to call his wife to come stop by in front of his clients to pay the bill. This left him embarrassed. After this incident, he came to a realization that he only had two options. 1, complain about what had just happened, or option 2, figure out a way to not have this issue come about again. And he chose option 2.
What is still the first card? We're honored in 75,000 more places than any other executive credit card, including American Express. Diners Club, we're just about everything. Diners Club, the first card. Diners Club, the first card.
The Diners Club card allowed cardholders to make purchases on credit at participating restaurants and other businesses. This card was first known as a charge card. Before the introduction of a charge card, you either had two options when it came to paying. 1, pay with cash, or 2, a check. And the Diners Club card quickly gained traction. In simple terms, this is how it worked. Cardholders would present their Diners Club card to the merchant, who would process the transaction and send the bill to Diners Club, which in turn would bill the cardholder. After the success of the Diners Club card, other companies saw the potential of the credit market and began to enter the space.
It's the only credit card I really need. Anywhere.
Bank AmeriCard. Think of it as money. Money when you're close to home.
Hey, nice trip.
Nice card.
1958, the Bank AmeriCard, which later became Visa, was the first general-purpose credit card that could be used to make purchases at a variety of merchants. Prior to the Bank AmeriCard, customers were limited to using credit accounts with specific merchants. In its first year in operation, the card was only available in Fresno, California, and was issued to approximately 60,000 customers. However, within 5 years, the Bank AmeriCard had grown to become the most widely recognized credit card brand in the United States. And by 1963, Bank of America had issued over 2 million Bank AmeriCards to customers throughout California. As I mentioned earlier, Fresno, California residents were the only people who were able to get a hold of the Bank AmeriCard. And with this gap in the market, many other banks began to take notice. 1966, a group of banks formed the Interbank Card Association, which later became Mastercard. When the Interbank Card Association credit card first launched in 1966, it was accepted primarily in the northeastern United States. And this was a game changer. You now had a credit card that worked all across the country. The only issue now was that there wasn't too many benefits to credit cards besides replacing it for cash or checks. And at this time, banks were very grimy when it came to disclosing terms with customers. It wasn't until 1968 that the United States Congress passed the Truth in Lending Act, also known as TILA. As stated on the balance, the goal of TILA is to protect customers so they are not surprised by financial charges, payments, or fees. Now customers felt more confident to get a hold of this plastic money. The only thing missing now was some sort of reward system to take credit cards to the next level. And in 1981, American Airlines launched the Advantage program. In a short summary, the Advantage program was a program that would accumulate your miles and allow members to redeem tickets, upgrade service class, or obtain free or discounted car rentals, and American airline executives knew they had a hit on their hands. The program was an instant hit. Other airlines soon followed suit, launching their own programs with similar rewards and benefits. But yet, this card was only hitting one niche of people, those who traveled often. To the majority, this card didn't apply to them. But yet, this next move would take credit cards to a whole nother level.
A credit card that pays you money back on every purchase.
Choose it, use it, get away.
Money that adds up to a yearly cash bonus.
Get it back.
All from a card that costs nothing to get.
1986, Discovery rolls out a money-back system. The target consumer was now anyone who was looking to get money back on purchases. And there was one other field that was on the rise in the 90s. Tech. The idea of buying things online was unimaginable until the 90s, where e-commerce sites were starting to be introduced to the world. Crazy to think that today we practically order anything online, from computers, refrigerators, even a sauna, and some illegal stuff has sneaked through the cracks. But going back 30 years in the early 90s, companies such as Amazon started testing out this whole buying online thing.
With more albums than any other music store, online or off. And now get up to 30% off store-wide, plus free shipping.
No, I can't come in today. I have a really bad cold.
Even though it was just books, buying something online and having it shipped to your door became a reality. And e-commerce took over. This was what credit card companies needed.
With Kmart Solutions, we created a virtual store within a store to give you.
This is the Cyber Market, IGA's new internet shopping service, the only one of its kind in North America.
Wherever you live in the world, as long as you can access the internet, you can place an order for Buffalo boots.
As these cards provided better theft security, shopping online became the new thing. But it came at a consequence. The Federal Bank Reserve of New York says that the credit card debt in the 90s increased significantly, rising from $200 billion in 1990 to over $500 billion in 1999. This increase was driven by a combination of factors, including the rise of reward programs, aggressive marketing strategies by credit card companies, and the growth of e-commerce. Borrowing money now was 100 times easier. With new innovations in credit card technology, including the introduction of chip cards, and mobile wallet apps were coming into place. Hundreds of reward programs started to hit the market, and being in credit card debt was considered the new norm. In the beginning of 2003, we were in the ballpark of $690 billion in credit card debt. And by the end of 2008, we had amassed over $866 billion. And a big factor was the 2008 recession. And in 2008, as we all know it, all hell broke loose.
37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down.
When the 2008 financial crisis hit, millions of people across the country found themselves facing unemployment, foreclosures, and growing debts. People were trying to stay afloat with their needs, having to turn to credit cards to resolve this issue. And shark loans rose to the top. People forced to get into these ridiculous interest rate agreements just to be able to borrow some money. And unfortunately, the 1968 TILA Act wasn't enough to protect customers from predatory companies.
It's called the Credit Card Accountability, Responsibility, and Disclosure Act, or the CARD Act. It puts a ceiling on interest rates for consumers.
Before this, banks were able to increase your interest rate without alerting you. Now, because of the CARD Act, companies are required to let you know 45 days prior. The CARD Act also introduced several new rules regarding fees. Prior to the law, credit card companies could charge nearly fees on everything, including over-the-limit fees, balance transfers, and late fees. The CARD Act eliminated many of these fees, making them more reasonable and transparent. And fast forward to today, where Americans are in the most credit card debt they've ever been before. Crazy to think about how this plastic money came about. All because of Frank and his feeling of embarrassment in front of his clients. Now, in 2023, we could be approaching a 2008 type recession.
Let's get to some other world news now. When Facebook's parent company Meta has announced it will be sacking more than 11,000 employees.
Laid off people across multiple divisions worldwide. Though the tech giant has not disclosed the numbers, reports say that as many as 1,000 employees have been shown the exit door.
Alphabet is the latest tech giant to trim thousands of jobs. The company announced it's slashing 6% of its workforce.
You got some layoff announcements today. 18,000 layoffs at Amazon, 11,000 at Meta, Facebook, 10,000 at Microsoft, which is really a fabulous company.
I'll be making a detailed video about the similar and new signs of possible upcoming recession. And make sure to click the sub button if you like informative documentary films about money, health, and world events.